Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of GeoData Vision.
Dean, great to see you again. We're finally getting some sun, and after all the rain we've endured this spring, what's on tap for today?
Len, I agree. Finally, some sun after all the rain. Not that we didn't need the rain, but certainly is nice to have some sun. It puts an extra bounce in everybody's step, and I think puts a smile on folks' face. So things are looking up. I was starting to think that we were not going to see any spring or summer, but I'm glad it's here. So today, let me jump in. I thought I would expand on my last podcast, which was dealing with compliance management systems. And in that last episode, I spoke about the elements of CMS, compliance management, the evolving role of the compliance officer, obviously changing in all the time, the shift in the regulatory priorities, actions to support the shift in appetite, and what I thought would be the most significant challenges in 2025 with regard to CMS. My plan today is to kind of expand on that, on the top challenges for privacy, cybersecurity, AI systems, and anti-money laundering, CTF, the impact and the solutions relative to that.
Dean, I think that's a great idea. I'm certain our audience ears are perked up to listen to your sage advice today. Go ahead. Let's hear what you have to say.
Oh, perfect. Let me jump in, Len. As one can expect, emphasis on data privacy and cybersecurity will continue to be, in my opinion, the number one challenge in 2025. Malicious people are employing advanced techniques to undermine data security, especially with the advances in artificial intelligence. The impact of this actually leads to financial loss in the billions, and I probably should say perhaps even in the trillions of dollars. And weak controls can lead to regulatory penalties, legal action, not to mention the loss of customer trust. So we certainly have to be on our game. Banks will need to enhance their control environment with certainly with enhanced cybersecurity measures, fraud, so on and so forth. So some of the measures that I would certainly hone in on is implement some sort of robust encryption protocol to protect the sensitive data. Yeesh, can't speak today, Len, but I was going to say the sensitive data at rest and the data that's in transit. So it's really important that they look at. I just read an article the other day about the criminals being able to now crack the 16-digit password encryption. So, so obviously the things are evolving. They should invest in artificial intelligence, in machine learning-based threat detection technology. I'll expand on that in a minute a little bit further. They should adopt proactive monitoring and incident response plans to reduce breach risk. And when I say proactive monitoring, obviously the opposite of reactive monitoring. We have to make sure that we're aggressively reviewing transactional activity and other types of reporting to take proactive steps to head off a particular incident. Establish comprehensive user consent management frameworks before collecting or even processing their data. So again, once we're trying to retrieve that information, we have to be sensitive to how do we protect it and process the information. Implement granular consent mechanisms for easy data control. And then lastly, I think employ data minimization practices. So collecting only what is required for specific purposes to reduce compliance risk and enhance customer trust. Don't just go all in. Get what you need, and that's it. And then that obviously reduces our overall exposure.
And you just cited 6 great recommendations, but there's a lot to do, obviously. Are there systems or applications that can help?
Yeah, that's an excellent question. And the short answer there is yes. Technology can play a vital role in managing compliance and mitigating risk. I think banks should invest in regulatory technology solutions, while expensive, to streamline compliance processes and enhance efficiency. Of course, I did say, well, it's expensive, but the alternative to that is obviously a regulatory intrusiveness, fines, so on and so forth. So not so expensive, but maintaining compliance with the changing standards can be expensive, but evolving significant resources and utilizing technology certainly can assist tremendously in those efforts. So while it's expensive, again, I think technology certainly can play a vital role with compliance risk, fraud risk, you name it, overall. And although AI can be or can have what I would call negative consequences. This, along with automation, can enhance compliance processes by analyzing vast amounts of data, identifying patterns, and making predictions. And of course, we've seen this specifically in the audit process. But AI detects potential infractions and reduces kind of that manual workload that we've been exposed to for quite a while. However, we do have to be careful. As we found with artificial intelligence systems, they can introduce bias in historical data, leading to misleading or even unfavorable outcomes. So, and you and I obviously have experienced that in fair lending with respect to data.
Oh, yeah, definitely. AI is definitely a potentially powerful and helpful tool that can help banks address these compliance issues. But as you just said, AI itself can create its own problems. What do you recommend for banks to guard against AI's potential problems?
Well, I'm certainly not here to provide a sales pitch, but at the same time, I guess I should. Uh,
Mhm.
audit, audit, audit. I mean, monitoring and audit kind of go hand in hand. Monitoring is typically, Len, a internal function that's done on behalf or an extension of management and making sure that their systems are accurate. In good input is good output. So once again, we have to validate those types of things. And of course, audit is that independent third party arm that comes in and says, yes, these systems are appropriate and accurate. And the information going in, the information going out appears to be legitimate. So therefore, you can have a much greater reliance, in my opinion, on those types of systems.
Mhm. Dean, I know M&M does significant audit work, and I'm certain you provide great help in this area of AI. And I'm certain that you've already done that work with a number of your clients. But it's never too late to start and do something to guard against these potential problems. Because again, AI can be an extremely powerful tool that can be helpful, but it also can be extremely destructive if it's not continually monitored and audited, as you just said.
You're absolutely right, Len. And we've actually had significant experience in auditing. It actually started back in several years ago in the BSA anti-money laundering area, and that was with automated solutions that were being used for suspicious activity monitoring, fraud monitoring components. There are two types of systems there that have typically been used. They call them rules-based systems, and then of course behavioral-based systems. But in both cases, they operate very similar to an artificial intelligence systems and require some sort of validation that that the output is accurate. So we certainly do that. And in addition to those things, I think as we talked about AI, privacy concerns as a result of the sensitive personal data could also have negative impacts. So we got to be cognizant of that as well. But banks need to ensure that they have stringent data privacy management, effective governance, and adhere to privacy regulations while, again, contemplating the use of AI systems and also ensuring that they have proper monitoring and audit controls in place as far as the data input and output.
Dean, you've mentioned and provided some great insight into how AI can be helpful and how it can be monitored and controlled, but specifically regarding privacy controls and the use of AI. Can you expand on AI automation and how it may help financial institutions?
Yeah, sure, Lynn. First, I'm recommending the use of AI given, I think, and again, this is my opinion, but the efficiencies and the ability to analyze and make predictions. But I'm also throwing caution in the air. As you know, system output is only as good as the information going into it, as I've indicated. So controls need to be established to ensure the quality of in and out, or I say the data in and out. So some examples of AI applications that folks can look at are, robo advisors. Those are AI powered robo advisors that can offer automated financial advice, portfolio management services. I know, firsthand, I've seen, Fidelity actually offer a robo advisor in their investment offerings. So chatbots for customer support. So many financial institutions have installed what we call AI powered chatbots to manage routine client inquiries and offer 24-hour help. So it's no longer just a bricks and mortar, a 9 to 5. Chatbots can provide immediate customer service, answer queries or inquiries that may be provided, and effectively address issues that are ongoing. So this boosts client satisfaction and certainly can ease customer service loads and provide some level of a confidence with your customer base that you're doing a decent job at handling requests. Fraud detection systems are very similar to what I was just talking about as far as the BSA AML space, but analyze transaction data to discover suspect patterns and prevent fraudulent actions like identity theft and unauthorized payments. AI-powered algorithms can rapidly find trends and anomalies in transaction data and allowing FIs to detect and prevent fraudulent activity more efficiently. So this safeguards both customer and institutions against financial losses. And as you know, this is just spiraling out of control with respect to fraud in the financial space. So very, very concerning. Risk management and credit scoring models. I mean, we all, I'm sure we've had experience with this, either personally or through our employment. But AI can better assess credit worthiness by analyzing data. This enables FIs to make smart loan credit decisions and successfully manage that risk. And AI can improve credit scoring models by taking into account elements other than, the traditional credit history that we've been accustomed to, such as social media data and online behavior. Now, while I say that, obviously there's a training component there that will need to occur internally for people that are contemplating that, because it's not just as black and white as it may seem. Loan application and approval. Certainly, artificial intelligence can automate numerous loan application stages, including data collection under HMDA. Of course, other things such as, financial information, and then, of course, verification of all of the information that's being provided. It expedites the application process and certainly can increase the customer loyalty and experience. Personalized marketing campaigns. It assists the financial institution in better targeting marketing efforts by analyzing consumer data, recognizing their preferences and their needs. I mean, obviously, looking at behaviors of individuals can give you a much greater peek inside where they could be vulnerable for taking advantage of a particular product or service that you're offering. Back office task automation. I think this is a big one where, you can automate repetitive and time-consuming operations as far as like data input, reconciliation, and report preparation. Those things are extremely time-consuming and costly. Regulatory compliance automation. I mean, this is a big one. Can certainly assist financial institutions in remaining compliant with complex regulatory areas by monitoring changes, recognizing the risks that are involved in some of the potential changes, and then, of course, automating reporting procedures and processes. Data analysis and risk assessment. Every time you hear a regulator open their mouth with respect to consumer regulations, they're always talking about risk assessment. You tell us where the risk is, and will validate that. Basically is what they're saying. So it can, using data analysis and AI can spot trends, challenges, make data-driven decisions from massive, I mean massive data sets. So this allows FIs to better manage their operation and, of course, provide mitigating controls. Enhanced decision making. So it can provide valuable insights and recommendations, and it can allow the financial institutions to make better judgments in areas such as credit risk rating, loan underwriting, risk management, et cetera, et cetera. So, there's many things out there, Len, and I think they're all valuable. Obviously, controls are critical, and oversight is absolute must.
Wow. I just counted up your recommendations. There were 10 helpful AI recommendations you just briefly went over. But I'm going to get greedy in this podcast. Do you have any additional recommendations or parting words today?
Well, yes, I will speak for just a minute, just because I've mentioned it a couple of times with respect to AML and CTF and, of course, BSA. So here's an area, again, that we've seen automation for some time between the rules-based and the behavioral-based solutions, the two most common systems. But financial institutions face challenges in ensuring that they have an effective AML, CTF compliance due to the rise in complex money laundering techniques. And, and the other thing that I've been seeing, and this happens, we talk about the political wins all of the time. Well, when we're in a Democratic controlled Congress, House, and of course presidency, we tend to see a lot of focus on consumer regulatory areas. However, when it shifts over to the Republican side, there is a greater emphasis from the regulators on some of the things like BSA, AML, and CTF. So it's important that, again, that we stay focused and on these types of things. But these methods that they use technical advances and, of course, regulatory loopholes, making standard compliance procedures and systems a challenge. So we have to make sure that we're staying up on top of all of this, and regardless of whether we're using a system or have manual processes. Financial institutions have to manage their compliance requirements and actively combat advanced illicit activities or potential activities, and ensure that they provide, controls that help them effectively manage. And some of those areas, again, regular, and I can't emphasize this enough, but regular employee training. I mean, I think the more that your folks know, the better armed you are. Regular training, not just with AML, CTF, but that's what I'm focused on at the moment, on some of the emerging trends that are happening, as opposed to just boilerplate, I think is certainly imperative, and they should do that ongoing. Strong customer due diligence processes. I know when, customer due diligence processes first came out, people were somewhat reluctant and felt intrusive into their customer because we're asking, some questions in order to assist in mitigating risks. So extensive protocols for onboarding clients, a regular monitoring of those high risk accounts, and increased scrutiny of odd transactions is a must. Technology should be leveraged to streamline and automate that process overall. And remember, the whole goal here with CDD is to establish a baseline of risks so that we know whether one deviates from that expected normal activity. It doesn't mean they're doing something wrong. It just means that we now have a red flag that we have to go look at to figure out, okay, what the heck might be happening? And then, of course, I'll call them more advanced transaction monitoring systems, AI, machine learning powered systems can certainly detect suspicious transactions in real time, reduce false positives, improve compliance operations and their overall efficiency. So depending on the asset size, obviously the complexity of your institution, the products, services, some regulators may require you have a level of automation. Some don't. You still have manual processes, but the bottom line is, once again, you have to have controls in place and have a proactive approach to managing overall risks associated with these types of systems, fraud, and having, again, adequate controls to monitor that. So.
Dean.
I think that's about all I've got today, my friend.
Well, you just squeezed 8 hours of discussion into 20 minutes.
Yeah.
But I do think you said you had one other topic or thought before we end today's discussion or this podcast. Do you want to elaborate on something and before we say goodbye to our audience?
Yeah, kind of bringing it back, Lenny, full circle, I guess, is what I was trying to get at. And that was, financial institutions must develop comprehensive and forward-thinking AI policies. So some of the considerations that I think they should, contemplate or certainly have AI models should be interpretable and transparent to explain decision-making, fostering confidence between the customer and regulators. Again, I mentioned audit. Make sure you have those things audited. Designing your algorithms within those systems to ensure equal treatment of your customers and eliminate, if as best you can, any bias. Have strong security measures in place so that we can protect the sensitive data that is used in the creation and the use of the AI systems. Must include good governance frameworks for AI research and usage so that we can promote, accountability and defend against unusual types of results. And then last but not least, we need to comply with applicable regulations. So tying it all back to the compliance management system is certainly critical and plays a major role for the compliance officer in managing risk as well as the institution overall. So that's what I can provide today, Len.
Well, I won't stretch you any further. This was a power-packed podcast. And I like that PPP, power-packed podcast.
PPP.
And I know our audience is probably going to replay this about 10 times because there's so much packed into it. But this is Len Suzio from Geodata Division saying thank you, Dean, for today's podcast.
Yeah, and this is Dean Stockford from M&M Consulting saying thank you for tuning in to today's discussion. Please let us know any additional topics that you'd like to hear in future episodes.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and Geodata Vision on LinkedIn for all the latest news and information on compliance hot topics.